buzzing stocks, the big movers this afternoon with Hormuz as always. Nikhil Ranka is CIO, Equity Alternatives at Nuvama Asset Management. He's with us. Nikhil, good to have you with us here. Thank you very much for joining us. So is there clarity on whether the market's breaking out, taking out prior highs on the Nifty, Nikhil, or once again, things are starting to go sideways after a good run?
So good afternoon, Prashant, and thanks for having me on the show. So Prashant, the last time I was there on the show and markets were closer to 25,000 levels, I've clearly highlighted that, when we were discussing the underperformance of India with respect to other emerging markets, that one of the key triggers for the emerging markets to move was whenever there was certainty on the trade deals with Mr. Trump, those markets had seen momentum and rallied. In our case, till that point of time, there was no certainty on when the trade deal would have happened. But when we started seeing news flow that, eventually we will strike a trade deal and the eventual tariffs could be between those 16 to 18%, that's when during Diwali time, we saw 5-6% up move in markets. We rallied almost from 25,400 to 26,200. If you look at the texture of that, FIs at the beginning of the month were almost short close to the tune of 40,000 crores. If you look at the data yesterday, they were net short by just 20,000 crores. So between beginning of the month and till yesterday, there was almost 20,000 crores of covering that has happened on index futures, and FI selling has also ebbed to a large extent in that sense. Earlier, we used to see 3,000 crores of net sell figures every day. That is now down to 500, 600 crores. So a combination of these things has meant that we've moved 5.5-6% in the month of October for us. However, having said that, what we have to now keep in mind is, 60-70% of the good news on trade deal is almost there in the prices. And post the quarterly results that companies have declared, if you see the FY27 EPS for Nifty, we are now standing closer to 1280 rupees, down from 1300 rupees. So we are about 20 times on FY27 earnings, and we are still not seeing traction in terms of those 14-15% earnings CAGR for Nifty. So my sense is closer to 26,200, 26,300. This rally will again start to see some resistance, and the trading band probably will shift a bit higher from 25,500 to 26,300.
Nikhil, so that point about earnings, 14-15% still looks to be a bit of a stretch for us to achieve. What's your own expectation at Nuvama now? Do you think this demand surge that we've seen in the festive season sustains in Q3, Q4? What are you all working with? And if you could just break it down segment by segment.
Yeah, so Rima, if you look at it, the most optimistic earnings estimate that people were expecting post the GST rationalization was for the auto sector. Now, if you look at the initial estimates for auto numbers that are going to be released 3-4 days down the line, the expectation consensus is still building close to 8-10% volume growth for the month of November. Which doesn't seem very, very high given the fact that a lot of pent-up demand would have come through, rate cuts were there. And, if you look at the way stock prices have moved, some of the four-wheeler names have moved from 13,000 to 16,500 rupees. They are already building in 12-15% volume growth when you do projections for those numbers and do reverse calculation of valuations. If November itself sees just 8-10% volume growth, then my sense is clearly the street will get a bit disappointed post the auto numbers that come on the 1st of November. Also, if you look at the volume numbers that have come from most FMCG companies and the commentary that we are hearing, we are not seeing very big deviation. 3-4% volume growth is still what we are working with. So therefore, I think that it's not going to be a game changer for the markets in that sense, the Q3 earnings. What we are today at close to 7-8% quarterly earnings growth rate, that might move closer to 10-11%. But I don't see a number beyond that for Q3 earnings in that sense. And therefore, my sense is we will still stay in this band of 25,500 to 26,300 till we roll over to FY28 earnings.
All right. Well, hi, Nikhil. Good to see you in. Going by what you're saying, it appears that now you're tilting more towards the consumption names rather than capex. Turning a little bit cautious on capex themes, which, by the way, I mean, have done very, very well. The government has led the way in the last 5-8 years or thereabouts. But now there seems to be some people who are taking the foot off the pedal. And you're in that camp?
So, good afternoon, Anchal. I do think that given, we will have to see the sort of revenue projections that come through after the next 2-3 months. My sense is this fiscal year, the government will have some shortfall closer to 1.5 lakh crores in terms of the direct tax collections that they had budgeted. And there's also 40-50,000 crores of shortfall that could come through because of the GST rate cuts. Given that expectations, we clearly feel that there could be some slowdown in terms of capex spending towards the second half of the year. And given the way stocks have rallied, the capex plays, the incremental upside in a lot of these names seems very, very limited. And we have to sort of remember that last year it was very heavy towards the second half. So the base is also extremely high for most of the companies for second half of FY25. So the YOY comparisons will also not look that great when companies report for second half of FY26. So clearly, I feel that some amount of caution is warranted in this capital goods plays from current levels.
By the way, for TVS Motors, those numbers are looking so good. I just want to point out that there is not just great volume growth, which we know, volume growth of in excess of 20% year on year, but even on pricing, TVS has seen pricing go up by about 5%. Stocks cooling off, numbers seem to be sort of in line with expectations. There's another story that's playing out on the ticker right now. IIFL Capital could be bringing in a large PE player as well, raising some money, and we'll get to those details. Which actually, Nikhil, hi, good afternoon. I anyway wanted to discuss financials with you because there's too much of hectic activity going on. First, tell us the companies which have already seen deals, banks or NBFCs, whether it's a Yes Bank, RBL Bank, Federal. I mean, as an investor, what does it make you think now? Do you think that over the coming few months, there is a case for a re-rating, or do you think it's more or less played in the price? RBL Bank, practically at lifetime highs. Yes Bank from the lows of 16, 17 rupees, it's already at 22 rupees. So how should investors look at these entities where the deal is either brewing or has just been announced?
So broadly for the banking space, if you look at it, our expectation was that from Q3 onwards, the NIM should bottom out and we should start seeing some recovery. So if you have close to 10-12% loan growth and some expansion of NIMs, then we were probably building in 13-14% NII growth for a lot of these banks. Now, what the consensus is starting to build in is that there could be another 25 basis points of rate cut as we move in December. And if the 25 basis points rate cut does come in December, then probably the NIM recovery will get prolonged to Q1 FY27, and you will still have flattish to 2-3 bips NIM decline for these banks, even when they report the Q4 earnings in that sense. However, having said that, a lot of these banks in terms of valuation, because the fact that, we have had time correction for the last 12-15 months, and earnings have still grown by 10-12%, meant that, in the case of RBL, it had come down almost to one times price to book. And given the large capital infusion that has happened, good parentage coming in, clearly, it's multiple re-rating that is happening for these banks. Similar is the case for Federal. It had come down almost close to 1.3 times, and earnings were largely in line. So Q1 FY27 onwards is when I think these stocks will again start showing PPOP growth of closer to 13-14%. Next 2 quarters could be similar to what we have seen in Q1 and Q2 in terms of, high single digit to low double digit pre-provisioning profit growth. But clearly, I feel that on dips, these are some of the names that one could look to add from a 12 to 18-month perspective.
Okay. All right, Nikhil, got it. Thank you very much for the conversation today. Good to get that perspective from you. Well, that's a view from Nuvama. Market right now still 70 points.